A tax-free U.S. trust. Does it even exist? How do you get it? What are all the do's and don'ts if you want to achieve this objective? Everything you need to know in this video. Hello, my name is Javier Correa, and I'm an enrolled agent in the United States of America, and I'm also the tax director here at the Rothbard Group. Now, trusts are some of the most powerful cross-border tax planning tools available out there. And in the U.S., trusts are increasingly popular, whether it be for asset protection, privacy, estate planning, succession planning, you name it. Trusts are front and center in many cross-border international strategies. Now, what very few people realize is that it is possible in the United States to have a trust that is also tax neutral if you set it up the right way. So in the US, and this can be very complicated, folks, trusts have to be looked at in different dimensions almost, right? So whether a trust is, for example, revocable or irrevocable, which is more of an asset protection question, not so much a tax question, that is more dependent on how the trust is drafted, the powers the grantor preserves, and in general, how the trust is overall governed, if the assets can revert back to the settlor, who is also the grantor of the trust, and so forth. That's more of an asset protection estate planning question. However, on the other side, you should look at the trust from a tax perspective. And here, we're looking at it from both the estate tax planning perspective and the income tax planning perspective. Now, in many cases, we want to look at the income tax planning side of things first. And this is where the denomination of grantor trust is crucial. In the United States, if a trust is classified by the IRS as a grantor trust, and let me tell you, that is already in of itself a challenge to determine when a trust is considered a grantor trust, when it is not considered a grantor trust. There are different triggers, different exceptions to those triggers, exceptions to the exceptions. The IRS doesn't make it simple for us at all. But assuming you're working with a professional like myself, like the Rothbard Group, and we guide you through that maze, and you've already determined that your trust can get that classification of grantor trust, then the beauty of it is that that trust will be treated, I want to say, almost like a disregarded entity. Many people are familiar with the single member U.S. LLC, that is kind of like a ghost for income tax purposes. Well, this is very similar, but for the trust. It just means that the income that flows into the trust, if it's a grantor trust, then that income will be attributable to the grantor, to the settlor of the trust, which means that for tax purposes, the trust simply does not exist under these circumstances. Now, why is that beneficial for clients of ours around the world? Well, it's very simple. A grantor trust can be a very powerful tool when you are using it in cross-border tax planning, particularly if we have a settlor or grantor that is a foreign person, meaning a non-resident alien, meaning somebody who is not a U.S. citizen, not a green card holder, and somebody who has not become a tax resident of the U.S. under the substantial presence test. So, for example, a Canadian citizen who's a tax resident of Panama would definitely qualify as a foreign grantor. Now, to make things even more difficult, when you have a foreign grantor, the IRS has even stricter rules. So you do have to make sure you're working with a professional if you're going to go this route. Now, assuming, again, that you have the proper advice and you've set up a foreign grantor trust, meaning a grantor trust where the settlor is a foreign non-U.S. person, then you are in a very interesting, let's say, Goldilocks zone. What does that mean? You have a trust that is formed under the laws of a U.S. state, South Dakota, Wyoming, Florida, you fill in the blank. That U.S. trust can then very easily, or more easily than other international trusts, open, for example, bank accounts in the U.S. That trust can also hold U.S. assets more easily, can access U.S. brokerage accounts more easily. It is a tool that is more, that is easier to deal with for many people in the U.S. if there are U.S. assets that have to be distributed upon your passing, and therefore you are planning already for probate and things like that. So if you have U.S. exposure as a foreigner, a U.S. trust can bring really all of those advantages to the table. I would also add, and this is one of the main benefits that I see here, when you have cross-border families, and I work with a lot of those, where maybe the husband is American, but the wife is Irish, or maybe the husband is Canadian and the wife is American, or even in my own case, I mean, I dated an American for a really long time, and we were getting serious, and had we gotten married, I mean, I would have been a non-resident alien, and she would have been an American. And so in all of those circumstances, the foreign grantor trust offers an exceptional planning tool, which is the fact that when you establish a trust as a foreign grantor trust, but the beneficiary is an American, the result is that if it's structured properly, all distributions that are essentially provided to the U.S. citizen beneficiary are considered gifts for U.S. tax purposes. And the reason why that is extremely important is because gifts are not taxable under the Internal Revenue Code in the vast majority of cases. Like, there are always exceptions upon exceptions to every rule, but gifts are usually and predominantly not taxable in the U.S. That would result in a situation where you have a foreign grantor trust. The trust has income. Remember, the trust is a ghost for income tax purposes if it's set up as a grantor trust. The income then flows down to the grantor. The grantor is a non-resident alien, only taxable on U.S. source income. So if you have foreign income flowing down to through the U.S. trust to the NRA, and the NRA is a tax resident of, let's say, Panama, that doesn't tax foreign income, at that point it's completely tax neutral. And then that trust distributes benefits to the U.S. beneficiary. The U.S. beneficiary will have to report that those gifts, that distribution from the trust, that he will not be subject to tax in the United States, making it a very powerful tool and one of the very rare instances in which this can actually lead to a U.S. citizen obtaining an economic benefit without incurring in a tax liability. Now, in addition to all of these things, there are other elements to consider. A U.S. trust also gives you somewhat of a solid image around the world. So, for example, there are certain instances, particularly residents of certain European countries, that have difficulties with certain other jurisdictions like Nevis or Panama or the Cook Islands, because simply those jurisdictions are either gray listed or blacklisted, and sometimes they can't access certain tax benefits because those jurisdictions are on the naughty list. When you have a U.S. trust, you can largely circumvent these things just because in most European jurisdictions, or at least all that I know of, the U.S. is in the whitelist. So that helps for international tax planning substantially. So bottom line here, folks, with proper planning, it is possible to have a U.S. trust that preserves tax neutrality and that also gives you access to U.S. financial infrastructure, that assists in U.S. probate and succession planning, and that on top of that also can give U.S. family members tax benefits that are essentially unmatched. Now, as an additional thing to all of this, you can also use the trust as an estate tax planning tool. That is also very important. In this video, we focused on the income tax side of things, but estate tax is a whole separate animal, and if the trust is set up right, you can end up in a situation where you also have an estate tax exclusion, or you can set it up in such a way where you're holding a blocker under the trust that also protects the settlor from U.S. estate taxes. Again, that would be a whole other video in of itself, but my point is it gives you a lot of options and a lot of optionality in a world where options seem to be shrinking very, very rapidly. So if you want to discuss U.S. trusts, if you want to discuss some of these creative and legal tax planning tools that the sophisticated entrepreneurs and investors are using to live a tax optimal life, then we would be very happy to service you. Rothbardgroup.com. I'll see you next time.